Hello everyone, this is CryptoDealers Live. My name is Jan Ruud, and today we're going to talk about the S to F model or stock to flow model for Bitcoin. So to start off this topic, I'd like to get into the stock to flow model first, talking about how it was brought up, when it was created, and why we are doing a video about this model today. So a stock to flow model is in very simple words, the core idea is that every commodity has a certain amount of circulating supply and an amount of new supply created every year. So the circulating supply would be called stock, and the new supply created every year would call flow. In some occasions, we say that flow is monthly supply or monthly new supply created, and stock is just everything that is out on the market. So stock to flow model was released in 2017, and today we're going to be discussing this topic based on two articles. The first article is a simplified kind of overview of the original article. So the original one was released in 2019 by a man whose Twitter handle is Plan B, and then the second guy who made a review on this on the original article, his name is Jesse Myers, or you might know him on Twitter as Croesus BTC. So the first article I'd like to base off is actually Jesse's. Here he talks about the stock to flow model and talks about how it is, well, basically the best kind of option and best point of view to see how Bitcoin is going to grow. And the most important thing here is scarcity. How can we value, right? So when we talk about Bitcoin with our friends, and let's say it's a person who doesn't know anything about Bitcoin and he's like, yo, this is something digital, I don't know what it is, why should I invest money in it? And the main kind of argument in all of these discussions would be that Bitcoin has a limited supply. And S to F model is actually a way to measure this, where you can compare this with other assets in the world and actually see why this limited supply is important, how this affects the price and the value that how people see this asset and how they see the longevity of it being just used in the world. So let's talk more showing and acting. So here is the scarcity thing I talked about previously. And down here, it's a great quote, I think, an example where it's basically saying that precious metals and collectibles have an unforgeable scarcity due to the costliness of their creation. This once provided money, the value of which largely independent of any trusted third party, but you can pay online with metal. Thus, it would be very nice if there was a protocol whereby unforgeably costly bits could be created online with minimal dependence on trusted third parties. So what this means is that, let's just get right into the stock to flow model. Over here, you can see a very good example with actually numbers and comparison to gold and silver. So here, S, as I said, S is we call it just SF or stock to flow. I'll be saying SF from now on. So stock, where it is, it's over. Okay, so stock is basically everything that is available on the market today, and flow is how much of new assets are created or produced depending on how you would want to measure it, monthly or yearly. In this case, this is yearly. You can see that over here we have, again, this data is from 2019, so it's outdated, but the example here doesn't really matter if we're up to date or not. So for gold, you can see that there's 185,000 tons available on the market. So this is stock, right? And then 3,000 tons are created every year. This would be flow. So the way we measure it is we take stock and divide it by flow. And in this case, if we take 185 divided by 3, we can see that gold's SF is 62. And this, again, as Plan B mentions here, it is the highest SF of any asset in the world that is widely used. And then on the other hand, we can see that silver comes second with 22. Over here, we can see that example as well. There's 550,000 available of stock, so circulating supply, and then flow is 25,000. So it's being, there's a lot more than gold, but it's being produced way, way faster than gold. Mined, right? And then palladium and platinum, you can see over here as well. The palladium is like just, palladium is just, palladium is just above 1. Plan B talks about it here as well, where it's just higher than 1, and that's okay because commodities, again, right, he talks about it over here, because commodities cannot get a higher SF because they're widely used. And if you would cut down the flow, or basically the creation or mine of new of the product, of new pieces of the product, or decrease quantity, you would rise the price. And since it's a commodity, it's widely used, you cannot do this. So this is why Bitcoin is more like gold and silver rather than anything else, like copper, zinc, or whatever. So now we go down here. Yep. Again, here he talks about value, how you can measure Bitcoin's value. And it is very important to understand, so this article was released again in 2019. And actually, Jesse, in this article, he talks about how this, wait, I think, give me a second. Sorry, I might be jumping back and forth a little bit. This topic is pretty interesting, so I'm trying to put my thoughts together on this. So before coming back to Jesse's article, I'd like to go back to Plan B's article. So this is actually the same chart that I've shown you just now. So what Plan B did here is he took this model of, again, before this, I should say, so at the time of creation of this article, Bitcoin's SF was around 22 or 25. So it was actually the same as silver. And this was 2019. And what the author of this article, what he was talking about is that having 25, like SF of 22 to 25 now will mean that every halving that we're going through will double up the SF for Bitcoin. And that is logically correct. But what he also did is he made a prediction about pricing based on this theory. And since his article was very deep and very logical, a lot of people followed it and thought that pricing was going to go this way. So this chart, what he did is he took data from the charts for every month of every year from 2010 to 2019 for gold, silver, and BTC. So over here you can see that at the moment of creation of this chart, BTC's SF was 25, silver was 22, and gold was 62. So what he did is, this is the exponenta, basically the line that is kind of dictating. So if you take SF as a theory and you put it on a graph, this black line would look it would look like this black line. So he took data for Bitcoin, gold, and silver for every month and put it onto this chart. And as you can see, the SF theory is generally correct. We can use it to measure value and pricing for these assets. We can see again that gold is, if we go back to Jesse's chart over here, yeah, we can see that gold, for instance, right here, there are more assets on this chart. I think it's wider, so it's more interesting. Gold just stayed within this piece all the time. So it wasn't jumping up and down because it's a very stable asset. We all know that. For Bitcoin, it's divided into clusters, again, as you can see here. But the thing is that there's a lot of kind of shifting, but directionally, this is correct and true. So that said, coming back to Jesse's article over here, Jesse is talking how the reason that Plans B work got so much attention and catapulted him to millions of Twitter followers is that he projected this observed statistical regression forward to create Bitcoin price forecast. So this is what I was just talking about, where he gave predictions on price. And that was actually something that brought him attention, but at the same time, made this model unpopular today. Because what he did was next. He said that, over here, Plan B released his audacious model suggesting that the 2020 halving would send Bitcoin's price rocketing towards a 55K. Okay, so we had a technical issue. I think we're back online. We left off here. So I was talking how the model is directionally correct, and I like the phrasing that Jesse used right here. Yeah, so another thing I wanted to kind of point out here in this article, in case you would want to read it and go through it yourself. Jesse, quoting him over here, he says, fast forward a few years and the S2F model has become deeply unpopular, the subject of derision, an example of overhyped statistical extrapolation that fell flat on its face. The fact that it has become deeply unpopular is true, but an overhyped statistical extrapolation that fell on its face, I do not believe it. He has his, I say arguments down here where he talks about the different versions, right? So over here we can see that he says the biggest mistake that Plan B made was that he revised second, yeah, over here he says that the biggest mistake that Plan B made was that he revised the F2F model upwards not once but twice. So this means that the first version of the model that we just talked about said that after halving the price will be around 55K. And that was true. That was actually like after 2020 we started going up and we reached those numbers. But after that, he released a second version that said it would go up to 100,000. And again, Jesse talks about this here, that there's a lot of different factors that shift the price, right? So apart from just being stock to flow, there's politics, there's different news, there's changes in the world, right? So as Jesse says here, by a combination of major headwinds that, in my opinion, prevented Bitcoin's price from extending into a blow-off top in the 125K range. So by different factors, we were expecting that, but it didn't happen. So the fact that Plan B decided to shift the numbers, I don't think that it's actually, it's a wrong thing. But the fact that he also released an even more bullish S2FX price model, that's already off a little bit. But still, as we said in the beginning, as the charts shows, and as Jesse says himself, that it's directionally correct. There are different factors that shift this, but it's directionally correct. And we understand that every halving, the stock to flow model will be showing more and more potential for BTC. At this time, we're already, right, 2020 halving passed, and we're already twice the SF that was when this article was released. And we are less than a year, actually around 6 months to the next halving, which will bring the SF higher than gold, and they will, well, I think they will never meet again, right? And after that, it will just go through the roof. So apart from different small corrections that the world has for BTC, this model is directionally correct. To close off this topic, I'd like to talk about Jesse's, before going into that, I'd like to talk about pricing a little bit more. So over here, Plan B, he was talking a lot about how you can do the calculations, what are different factors that can impact it. And over here, he talks about these factors. Actually, the whole paragraph is about it, saying that, hey, this can affect it, that can affect it. And he wasn't very, he did the prediction for price right here, but it wasn't anything about, guys, go buy this, go buy that. So as we know, in the crypto market and everywhere else, in terms of we call this chipmunks, the people that do not know the topic good enough, and they just read things and go into it. So we saw a lot of hate going towards Plan B after the more bullish versions were released, and that is fine. That is fine. This is just an analytical piece where he presents the model. Here he explains how to, the power of fractals, why it's this, why it's that, why over here he talks about Bitcoin crashing, why it's dipping, and everywhere, everything else. And below of Jesse's, over here, yeah, down here, this is a great chart to finish off this this topic. But before jumping to it, I'd like to go through the part that Jesse called why the S2F model fell short. So as I already mentioned, he talks about that as well. Models aren't promises. They're math applied to an existing data set to offer a probabilistic representation of the future. probabilistic representation of the future. Importantly, these models generally assume all other conditions will remain constant, but that's not reality. So, yeah, just repeating myself, there are different factors, and we should not believe one or the other theory or model for 100%. We should understand there are different factors that we do not know. So Jesse talks about factors that even if today we try to make the model and take into account all of the macroeconomical or whatever things that can affect it, it's impossible to calculate because we do not know how all of these numbers, digits, and factors will change in the future. The second, the second point in this macroeconomic headwinds section is that he says, had these headwinds not existed, maybe we would have we would have reached six figures. Would there still be so much bitter hate for the S2F model then? For what it's worth, I believe that last cycle's headwinds are turning into next cycle tailwinds. Check out the full analysis on this recent piece. Again, criticizing this model, he also talks about how it is actually correct, and there were just different factors that made it not possible to reach what we should have reached. But the fact that we didn't reach it previously means that we'll have a bigger jump this time or the next halving. This section is also very interesting. It talks about asset class inertia. Basically, Jesse talks about assets. When Bitcoin was worth 1 billion, it was easy for it to grow because the inertia in terms of people understanding the asset is small, right? And there's more people that are eager to risk to try something new. But at the time where Bitcoin's evaluation is 1 trillion, which we have seen already previously, that's a much harder task because wealthy people, they're familiar with gold. It's been around for a long time. And when they're thinking about safe investments or store of value that they have, they think about gold. It's a physical asset. We dig it up. We know the S2F for it. But Bitcoin is something new. And it will take, right here Jesse talks about this, is that it will take a couple of generations for people to understand what Bitcoin is and to actually use it properly. So apart from the S2F model that shows us value of the asset, it might not be reflected into the pricing right away. We might take another 10, 20 years to actually reach the required, sorry, not required, but the numbers that Plan B projected in his graphs. Shifting towards the end of this topic, Jesse talks about long live the stock to flow reality. He says, with a couple of big caveats, I believe the stock to flow conceptual model is still valid. Of course, there are problems, well, not problems, but just caveats, as he says, that, you know, there are different factors. We could not predict them all, but directionally it is correct. Actually, here he talks about how it might take a long time, something that I mentioned just now, and this graph I think is a very interesting graph. It shows that halvings are actually affecting price, but for now, unfortunately, there is a downtrend, and again, After every halving, we can see that the price is still dropping. But it's still growing like a ladder. It's going up every halving. So we're directionally, I keep saying it and I will keep saying it. Directionally, this is correct. And to finish off this topic, I'd like to mention Jesse again, and his. Let me find this real quick. Here it is. Here it is, right in the beginning of the article. I think it's a great quote. For this reason, I have long characterized it as specifically wrong, directionally correct. And in my personal opinion, Jesse is 100% right here. It is directionally correct. We could not tell the future. Nobody can. We do not know the factors that affect the economy, the Bitcoin's price, and all of the other assets' prices. So in specific, we could not guess it. But directionally, as we can see in multiple graphs, here and here and here, the stock-to-flow model is a perfect example of Bitcoin taking over the world, being the most valuable asset that we have and that we will have for a long, long time. Halvings are going to take place. Halvings are going to take place for many, many years ahead. And SF for Bitcoin will be growing exponentially. And on this note, I'd like to end this topic and say thank you for watching this live stream, and we'll be back with another topic soon.